Hey everyone, welcome back to Corporate Decoder. Today, the Children's Place Incorporated, ticker PLCE, just filed an 8K reporting a key executive departure, and it hints at ongoing strategic shifts. Quick note, this is not financial advice, just my take on public filings for educational purposes. The main story here is a leadership change that signals the company might be looking to restructure its executive team. So on July 6, 2026, the Children's Place Incorporated announced that Kim Roy would be stepping down from her role as executive director. This means she is no longer an employee in that executive capacity. But here is the catch, she is not leaving the company entirely. She will continue to serve as a member of the board of directors. Think of it as shifting from running the day-to-day operations to being on the team that oversees the big picture strategy. The filing is careful to state that this move wasn't due to any disagreements about how the company is being run or its policies. This is important because it suggests the change is more about strategic alignment, or perhaps a planned transition rather than a conflict. Right now, the Children's Place and Miss Roy are still working out the details of what her departure from the executive role and continued board service will look like. This separation agreement hasn't been finalized yet. Once it is, they promise to file an update to this report showing exactly what those terms are. This news comes at an interesting time for the Children's Place. We know from recent headlines that the company has been drawing down on its credit line, which is never a great sign. Additionally, the company reported its first quarter financial results back in June, highlighting strategic priorities. This executive shuffle could be part of a larger effort to refocus or restructure the company's leadership as it navigates these financial waters. One other small item in this filing is about exhibits. They're including an interactive data file related to the cover page, which is standard practice for these types of reports. Now, like almost all company filings, there is a section on forward-looking statements. This is basically a disclaimer telling us that anything they say about the future might not actually happen. They remind us that actual results could be very different and cite risks mentioned in previous filings, like their annual report on Form 10. These risks they mention are pretty standard for a retail company. They talk about the risk of not being able to make enough money to cover their operations and debts. They also bring up trade policies and tariffs, which can make importing goods more expensive. Then there is the eternal retail challenge of predicting fashion trends and what consumers want. And of course, the competitive nature of the business and how consumer spending habits, especially with inflation, can impact sales. They even mention risks related to supply chain disruptions, potential litigation, and the uncertainty of weather patterns. It is a lot of potential headwinds for any retail company. The report is signed by Kenneth Lee, who serves as General Counsel and Corporate Secretary for the Children's Place Incorporated. Looking at the broader context, the Children's Place has a market cap of about $66 million and their stock price has been trading quite low, around $3. They have around 2,500 employees. A major institutional holder, Mithaq Capital SPC, owns a significant chunk, over 61% of the company. This means any strategic decisions made by management or the board will likely need to consider the interests of this large shareholder. This departure of an executive director, while being a non-disagreement move, is still a significant event. Companies often change leadership when they are facing challenges or looking to implement a new strategy. Given the recent headlines about drawing on credit lines,